And I really think Nestle's dividends are basically akin to blood money to keep people from complaining too much about their horrible business practices. I'll pay you to keep your mouth shut. Hey everybody, Walrus here from Walrus Street, bringing you your news and earnings for the week of August 30th, 2021. Just a reminder, I am not a financial professional. All information in this video is for entertainment purposes only. Well, thanks to Big Daddy Jerome Powell, we had a very positive week in the S&P and the NASDAQ, and even my boy, the Russell, rallied 3% on Friday, as Powell basically said tapering's not going to happen until the end of the year at the earliest. We're not looking at rate hikes until the end of 2022, most likely, and everything's golden, everything's green. A lot of analysts are suddenly very bullish on the stock market, and when people are bullish on the stock market, small caps, micro caps, like those represented in the Russell index, tend to do very well. So here's to hoping that Friday's 3% gain on the Russell is a signal of things to come. Keep in mind, the Russell is still below where it was in early March, so that index still has some catching up to do, even though the S&P 500, the NASDAQ are at all-time highs. Let's see if it can get there. Just a reminder, if you didn't see my video last week, I am going to be making these news and earning videos a little bit shorter. I'm going to be doing separate videos for the weeks where I have options plays, and I'll be putting them out. I'm going to be doing some stock recap plays on DD videos that I've done. I'm looking to put out a lot more content on my channel. Last week, I was able to put out a second video on PSTH. This week, I'm going to be putting out an update on Citius Pharmaceuticals, and I am going to be putting out an options play. So, hope you guys enjoy that. Enough talking. Let's get started with the news. The biggest news, of course, would be Jerome Powell speaking in Jackson Hole on Friday. He had his prepared statements. Once again, as you would expect, inflation is transitory. I mean, he didn't say the words exactly. I felt like I was listening to the speech and I was like, say it. Say the words. Say the words. He didn't say it, but he heavily implied inflation is transitory. Let's just wait it out. As anticipated, Powell said the Fed might wind down its $120 billion program of monthly bond buying by year end, tapering it down. But he also signaled that the Fed was in no hurry to raise short-term interest rates from near zero. That could mean rate increases wait until late 2022. Now, late 2022 would be in line with some of the earlier projections that we've seen, and some of them were actually going as far as early 2023. As a response, the benchmark S&P 500 rose nearly 1% on Friday to 4509, its first close above the 4500 mark and its 52nd record close of the year. The index gained 1.5% for the week and is now up 20% so far in 2021. I know on this channel I talk a lot about individual stocks, but the truth of the matter is my retirement portfolio, which is where most of my money matters, is made up almost entirely of ETFs with just a couple of individual stocks. And my largest holding by percent is in VOO, which is the Vanguard S&P 500 ETF in that portfolio. I think overall in my retirement portfolio, VOO makes up something like 29% of the portfolio. So you can see how confident I am in the S&P 500. And, you know, you get these 20% gain year to date, and we're only looks at watch, not wearing a watch. We're only about 3/4 of the way through the year. Here's a key passage from Powell's speech. The timing and pace of the coming reduction in asset purchases will not be intended to carry a direct signal regarding the timing of interest rate liftoff, for which we have articulated a different and substantially more stringent test. So basically he's saying don't read too much into the restrictions of the bond buying, the limitations of the bond buying. We're doing something totally different for the increases in the rates. Cliff Hodge, CIO for Cornerstone Wealth, called the speech uber bullish for stocks. Jim Paulsen, chief investment strategist of the Lateral group, said the Powell speech and potential peaking in the U.S. COVID infections in the coming weeks could lead to a second reopening trade as investors again favor small cap and economically sensitive stocks. That theme played out Friday as the Russell 2000 index, a small cap benchmark, rose nearly 3%. The rest of the article talks about how the S&P S&P needs the prices to keep coming in, the money to keep pouring in for the equities, because valuations are getting a little bit silly. And yes, valuations are getting a little bit silly. I think investors are very optimistic right now. And I do think something bad is going to be coming maybe as soon as September. But hey, you know, I'm not really a bear. It's not like I'm selling my stocks. It's just if something bad happens, I'm not going to be surprised. And I am in the phase where I'm keeping cash on the sidelines. Other than my normal allocations into my retirement portfolio and maybe some small options trade values, I'm not going to be putting extra money into the stock market right now in my trading accounts. I'm going to be waiting for another dip so I can dump it in on the dip. Is that the smartest idea? Well, you know, I've already maxed out my allocation into my retirement account, so I am staying pretty safe on that end, and this is what I view as extra money, and it's just my personal opinion. So I am going to be trying to buy the next dip whenever it does come. Speaking of the S&P 500 being just a baller index, it doubles from its pandemic bottom, marking the fastest bull market rally since WW2. The S&P 500 has doubled on a closing basis from its COVID trough of 2237 on March 23rd. It took the market 354 trading days to get there, marking the fastest bull market doubling off a bottom, according to CNBC analysts of data from S&P Dow Jones indices going back to WW2. On average, it takes bull markets more than 1,000 trading days to reach that milestone. And here's the pretty chart that shows that. Well, it's basically just an up arrow, a giant green buy signal. Trust the stock market, trust the index. I mean, that's pretty good if the average is 1,000 days or more to recover from something like we had on the COVID drop, and we hit it in 354 days. I'm no math expert, but I'm pretty sure that's like 35% of the time. And a lot of that is going to be due to the fiscal stimulus. A lot is going to be due to the actions the economists, our regulators in our economy took to take care of the stock market, to make sure that people had a place to go with their money, to make sure that people had confidence that the market wouldn't just crash and bottom out. And, you know, we're being rewarded by this amazing bull market recovery. Much in line with that, dividend payouts are going to hit 1.4 trillion in 2021, nearing pre-pandemic levels, research shows. This makes sense as we just hit the recovery in the overall market. Dividends are probably going to be nearing those same levels. Dividend payments in the second quarter jumped 26% from the same period last year to 471.7 billion, just 6.8% below the level seen in the second quarter of 2019. Samsung, yay Korea, surpassed Nestle as the world's largest dividend payer, with Rio Tinto, Sberbank, and Sanofi also making the top 5. Now, I knew Samsung was a really big dividend payer, and it's a huge tech company here in Korea. It actually represents something like 75% of the overall Korean stock market. That's a little top heavy, and that's one of the reasons I don't invest in any Korean index funds. You might as well just invest in Samsung, but that's another story for another day. I was surprised to see Nestle as the second largest dividend payer in the world. Nestle is kind of like a piece of shit company, and everywhere they go, they absolutely ruin the environment, charge people for water, steal water for fractions of a percent of the value, and they kind of just strip the earth of its natural resources. Nestle really is just a parasite of a company, and I really think Nestle's dividends are basically akin to blood money to keep people from complaining too much about their horrible business practices. I'll pay you to keep your mouth shut. Also, just one more comment about the S&P. This was released from Bank of America, and they're talking about market fragility and how we have now gone 196 trading days without a 5% pullback. 196 days, good lord, this is trading days, not calendar days. So Bank of America was basically warning that the market's in a really fragile spot right now. Bank of America is also holding some ridiculous short positions, and they're probably wearing the brown pants, trying to drum up some fear in the market so that people pull their money out. But hey, you know, that's just my tinfoil hat theory on this one. Now, even though the US did not say anything about raising rates until, you know, the end of 2022, it's looking like, South Korea became the first major Asian economy to raise its interest rates. The Bank of Korea increased its base rate of interest from a record low of 0.5% to 0.75%, and the move is aimed at helping curb the country's household debt and home prices, which soared in recent months. It's the first time the Bank of Korea has raised its main interest rate in almost 3 years. You can see how the cost Kospi reacted to this. When this news came out, the Kospi was sitting around 31.50, and by the end of trading, the beginning of trading the next day, we dropped all the way down to 31.10, 31.11. Since then, it's regained about half those losses, so this really wasn't a huge drop. But also, it's important to remember the Kospi is not really at an all-time high. If we go out to the max chart, the all-time high was a couple of months ago in the middle of the summertime. June 25th, the Kospi hit an all-time high, so we're still down from that. So this interest rate news didn't really have a big impact on the Kospi. One of the things that I would be doing here in Korea, though, is starting to buy some bank stocks with the increased interest rates. I think something like Kakao Bank, which just IPO'd. It's got the fintech advantage over the traditional banks. I think Kakao Bank is going to be a really good investment here in Korea. The valuation's already soaring pretty good, and this type of interest rate, higher interest rate environment is only going to help the banks. So that would be where I would end up going here in the Korean economy. Sadly, that's not a company that's available for trade for most international investors, but just keep an eye on that one, Kakao Bank. And it is separate from the Kakao Corporation. It did end up IPOing as its own entity. So if you do look up some information about Kakao online, don't get confused. The fact that Kakao Bank is separate from the Kakao parent organization. Here we've got from the Wall Street Journal, the FDA gives the Pfizer-BioNTech COVID-19 vaccine full approval. This happened on Monday, and the move was quickly followed by announcements from the Pentagon and the New York City School District and others that they would begin requiring vaccinations. The FDA's approval was seen by public health officials as a key step to convince hesitant individuals to get the shot and to encourage employers to mandate it. However you feel about the vaccinations, the FDA approval finally remember, the Pfizer-BioNTech vaccination was the first one to come to market last year. So the fact that the FDA finally approved this one gives the US government a little more power for requiring the vaccination to be administered, to be taken, and it's going to create a very interesting dynamic in the workplace with employers forcing their employees to get vaccinated no matter what their opinions are. Whatever you think about that aside, this is something that we're going to be dealing with here. And this was a perfect example of buy the rumor, sell the news. We started getting some news about the FDA approval of the Pfizer-BioNTech vaccine last week, and you can see the price kind of spiked around 51.86 for Pfizer shares. Even on Monday, the price went up pre-markets 51.36, and we ended up closing lower Tuesday, Wednesday, Thursday, Friday. All week, the Pfizer share price bled out. And this might not look like a really extreme move, but you have to remember, Pfizer is sitting on a free float of 5.6 billion shares. So the fact that this ended up losing a couple percentage points this week, with the largest drop coming on Tuesday of a 3% in the single day, this is a big deal for the stock, and it's probably going to take a couple weeks for it to recover. I saw a lot of chatter online of people just in disbelief that this was going to happen, and they couldn't understand why Pfizer was dropping. And this is kind of the joke where you just say, well, it was priced in. Everything's priced into the market. We knew the vaccine was going to get approval. And you have to wonder if in this case, though, that is true, because Pfizer had a really astounding run up since their vaccine was announced at the end of last year. We have to assume that the general market expected approval from the FDA for this product. It was already being administered to people. Like, the opposite of approval, disapproval, would have been disastrous, because there's already been millions of people vaccinated worldwide with the shot. So if the FDA suddenly doesn't approve it, that's where the stock craters. So this pullback here, I'm not saying I expected it personally, but it can be rationalized pretty easily. This story's absolutely ridiculous. Rivian files for IPO, seeking about an $80 billion valuation. The maker of electric trucks and SUVs is backed by Amazon and Ford. These are two of the larger investors. The company filed confidentially last week and aims for a Thanksgiving IPO. Amazon and Ford both are investors, early investors into Rivian, and if this company ends up going public and gets valued at $80 billion, let's just take some perspective here. Ford, which is one of the largest investors in Rivian, which is a legacy automaker, which is one of the largest auto companies in the world, has a market cap of about $52 billion. Rivian is seeking an IPO valuation of $80 billion, and Rivian so far has sold this many trucks. I'll double it. This many trucks. Zero trucks. No trucks. Ford has the F-150 EV that the president ended up test driving a couple months back with people lining up waiting for this truck. I am shocked with this Rivian valuation. I think it's absolutely absurd. And yes, I understand it's future looking, but how can anybody possibly take Rivian and value it higher than a company like Ford, which basically is one of its largest investors right now and has a similar product? I have no idea. No idea. This one has like the making of a meme stock, and I'm sure once it IPOs around Thanksgiving, there's just going to be some ridiculous price fluctuations here. Truly though, if I can get some shares on IPO day, who knows? Maybe I'll just throw in for a couple of shares and just ride it up, because I guarantee this is going to get ridiculous before it drops off. Now, speaking of ridiculous valuations for electric car companies, Cathie Wood ended up speaking about Tesla, and before you get your panties in a knot, I know Tesla's more than an EV company. Cathie ended up having some interesting comments on Tesla as far as its AI taxi service potential goes, and how they were increasing their investments.
And we've increased our estimate here. In the next 10 years, we think the autonomous taxi network opportunity in the U.S. will be $11 to $10 trillion from nothing today. Think about that.
It's huge. It's
11
massive.
today. Our economy, now it's not just this economy. That 11 to 12 is a global opportunity, but just to give you a sense of the size of that opportunity, our economy is $21, $22 trillion. This opportunity alone is $12 trillion in 10 years.
Yeah, I think that's enough of that. So I like Cathie Wood. I think she is a visionary. I like ARK. I think it's been unfairly hit as far as its price goes, but this is kind of silly. Right now, the AI taxi ride sharing global market is valued at basically nothing. Even the ride hailing and taxi market overall right now, according to Statista, is reaching a revenue of about 258 million in 2021 with a CAGR of about 11%. So in 5 years, we're going to be looking at about 392 million. That's right now the ride sharing taxi market, even projecting out 5 years with an 11% CAGR, we're looking at less than 400 million. And here Cathie Wood is saying the AI ride sharing taxi service global market is going to be valued at 10 to 11 trillion dollars. That's that's obscene. That's obscene. I mean, the entire stock market of Japan, which is like the second largest market in the world, is valued at 7 trillion. So we're talking about just automated taxis and AI and ride sharing is going to be hitting up around 10 to 11 trillion in 10 years. You know, Cathie, much respect to you, but I beg to disagree here. I think it's going to be significantly less than that. This seems to me like she's just talking up the Tesla investment and defending her case as a Tesla bull. And to her credit, she believed in Tesla when almost nobody else did. So she's definitely got her head in the right place, but this seems ridiculous. Next news story, on SPAC week a couple months back, I covered Rocket Lab as my favorite space company to invest in for rockets. One of the other SPACs that went public, Astra Space, they just had their first rocket launch since becoming a public company. After a wobbly liftoff, Astra Space rocket fails to reach orbit once again. That doesn't sound good. Following a scrub the day earlier, rocket builder Astra on Saturday launched its rocket from Kodiak, Alaska. The launch was the company's first since going public. 1 second into the flight, Astra execs told CNBC an engine shut down. I'll show you the video in a moment. It's actually pretty incredible. The CEO said one of the engines shut down. The company's investigating the reason. The CTO added the system performed relatively well under the circumstances. The rocket had sufficient thrust even with one engine to lift very slowly off the pad, and the guidance system maintained control of the rocket. Considering one of the engines completely shut off and failed, this really was an incredible launch. And you can see here, this is on the launch pad of Kodiak. Immediately upon release, the rocket starts drifting sideways because one of the engines shuts off. I mean, that is like, that's not supposed to happen. This is like some Kerbal Space Program stuff right right here. You can even see the cameras panning upward. Where's the rocket? Oh, wait, no, here. We're going sideways. So this is obviously not ideal, and people were teasing that they didn't even make orbit, whatever. They tumbled at 35 kilometers. There was so much extra fuel used from the one engine, and the fact that the other one just shut off, this rocket couldn't possibly make it. But the fact that it was actually able to make it up off the pad on one failed engine, and that the control system kept it upright, this is really phenomenal. That being said, I fully expect Astra's share price to take a big hit on Monday. Just at the beginning of August, we were trading at a low of about $8, and this looks like a pretty firm floor here for the price. Right now, we're up at about $11.67. The launch was on Saturday. Even after hours, it dropped a percent, and this was before the Saturday launch. Even pre-market, it's going to be dropping off probably below $10, and I know that's a bold claim, but this is going to take a really big hit. I expect Rocket Labs to actually get a bit of a boost. See what I did there? Rocket Labs, it's going to get a boost because it's a rocket company. Shut up, Walrus. Coinciding with Astra's failure, more or less, on their launch, even though I know it wasn't a total failure. Peloton reported their earnings, and the stock dropped about 8%. Peloton reported a revenue of $936 million, GAAP loss of $1.05 per share, beating estimates on revenue, missing them on earnings. What's important to note is that their connected fitness subscriptions are growing over 2.33 million, while their paid digital subscriptions increased to over 874,000. The problem is those growth numbers were not high enough to satisfy most of the investors in Peloton. Keep in mind, Peloton was trading there for a while, I think right up to this earnings report, at about a PE of 200. So that's really high. When your company's trading at a PE of 200, you need to have like sky-shattering optimistic news every time you talk to the press. And these growth numbers are plateauing from where they were in the pandemic. And it's very obvious that Peloton is losing subscribers, or at the very least, they're not getting as many new subscribers because people are just spending their money going back to the gym. I mean, with a lot of states lifting lockdown protocol, are you really going to want to spend $40 a month on a Peloton subscription? Or would you rather spend $40, $50 a month and actually go to a gym with a wider range of equipment? And things are looking so dire for Peloton that the company actually ended up cutting the prices of its bikes by about 20%. And I really think this is like the beginning of a desperation play. They see the writing on the wall and they're trying to bring new people in by cutting the price of their bikes. 20%, that's a really big discount. And, you know, it might work heading into Thanksgiving, into Christmas, into the holiday season, but dang, that just does not sound good. And apparently a lot of people also agreed with that. Here we are with Peloton. We're down to $104. You know, we just go back to January and we're sitting up at $171. And this stock price has really been just taking a hit. Thankfully, though, this $100 seems to be a bit of a strong support for the stock, and other than right after the earnings report, volume has been stabilized, so I don't expect it to drop a whole lot lower, but still, this isn't really a great sign for Peloton going forward. I think people are going to slowly be closing out of their positions, expecting this to enter a bit of a downtrend. One of the bigger news stories this week was Support.com, which entered a bit of a squeeze territory. If we go back, let's just go back on the 1 month chart. Support.com for a long time was trading around the $7, $8 level. This month, it slowly started rising up about a week ago through the teens. Friday, we ended up hitting up into the 50s before closing at about 26.37. Support.com is one of those legacy IT companies. It dealt with computer tech support. They offered a service. They're merging on September 17th with Greenidge Generation, which is a green energy Bitcoin mining company in upstate New York that's using natural gas to power its Bitcoin miners, giving it an incredibly low operating cost and efficiency level. So Greenidge and Support are going to be merging. For every Support share, I think you're getting like 1/8 of a Greenidge share, so it's not even an even merge. But still, there was a very low float available on Support shares, and it was a very heavily shorted stock, so this ended up being a bit of a short squeeze. Now, on Friday, it looked more like a gamma squeeze to me, as the entire options chain was closing in the money Thursday and Friday. So I think it was a bit of a gamma on Friday, and I I think support still has some legs left, but still, I mean, it's really risky to play anything like this. Now, I didn't cover this one on my channel directly, but I have been talking about it on Twitter for about a month. I opened up an options position in support with the $7.50 calls back at the beginning of August. And by the way, if you're not following me on Twitter, at the Walrus Street, I talk about a lot of my ideas there on Twitter that I can't cover in a YouTube video because it's just faster to type out 140 characters on my phone before I do something than it is to make a video, obviously. So anyway, I talked about support a couple times on Twitter, and my position is up substantially. Right now, I've closed out almost all of my options. I still have one call available, but I've already netted something like 500% on the ones that I closed, and the one that's still open is up 2,000%. I mean, this is just a ridiculous position, and I'm probably going to close it out by Tuesday, but there's, in my mind, a pretty solid chance that this ends up rising this week. But once again, it's a short squeeze play. We don't really know what can happen. Let's take a look at the upcoming earnings for this week. A lot of Chinese companies, some more cloud computing companies. We have been seeing the cloud computing companies reporting some really great earnings coming in. We've got a couple of retailers that I'm interested in. Of course, Chewy, I expect to do really well. A lot of GameStop shareholders really root for Chewy because of the Ryan Cohen connection. My Campbell's Soup dividend stock is going to be reporting on Wednesday. Yay. But a few that I actually want to talk about briefly are American Eagle, TLYS, Five Below, and Charles & Colvard. Five Below is effectively a dollar store, except instead of a dollar store, it's a $5 store. And last week we had Dollar Tree, Dollar General reporting. Their earnings reports were decent, but they actually gave some lowered guidance for the future because of increased freight costs. And they already run on pretty tight margins. So something like freight increasing, which is an expense that you really just have to deal with and accept the costs for, this is not great for the next quarter for Dollar Tree, Dollar General. What we saw was after Dollar Tree, Dollar General reported, they reported on the same day, Five Below's stock price also took a hit, and their hit was proportionate with the hit that Dollar Tree and Dollar General took. So I think a lot of people were assuming that Five Below is going to be reporting something similar on their earnings report. This is the day after Dollar General, Dollar Tree reported their earnings. Five Below ended up dropping about 9% over these 2 days. So the big question here is that drop basically it? And now Five Below is going to report their earnings. Everybody's going to be like, oh, well, that's already factored in because we saw this from Dollar Tree, Dollar General last week. It already took the hit. Five Below is going to increase from here. That's what I'm going to be watching for. Or is it possible that it drops even lower? Personally, I think Five Below already had its negative reaction to that earning news about the increased freight costs when Dollar Tree, Dollar General reported. And I think Five Below is going to rise this week off of their earnings report, which should be decent because, again, Dollar Tree, Dollar General, their earnings were decent. It was just the guidance was bad. So I'm thinking Five Below rises this week for those reasons, even if they share negative guidance, because the price drop for them already happened last week, coinciding with the Dollar Tree, Dollar General news. That's some big brain stuff right there. Let's see if I'm right. Regarding American Eagle and TLYS, both of these are casual clothing sellers, and more or less they appeal to the same demographic. Now, last week we had Abercrombie & Fitch and Gap reporting, and both of them reported pretty good. I think Fitch killed on their earnings by like $1 EPS. Their revenue was a little lower than expected, but still up 25% year on year. Gap killed its EPS and its revenue, and I would kind of expect the same from American Eagle and TLYS this week. I'm actually going to be looking at American Eagle as my options play of the week, and I'll be releasing a separate video for that this week, so check that out if you're interested. Now, the last company that I want to just look at that's doing their earnings this week, this is a really cool company. There's no options available on it. It's a penny stock, but the company's profile, it's called Charles & Colvard, and they manufacture, market, and distribute their own moissanite jewelry and their manufactured lab-grown diamonds, the Cadia lab-grown diamonds and finished jewelry. The company's financials are pretty solid. They do have increasing revenue. They have solid net income. They are a profitable company. They have a really solid net increase of cash and cash equivalents. Quarter on quarter, it is growing. So this is not a broke company by any means. The free float is pretty low, 25.8 million. Shares outstanding is about 29.8, almost 30 million. It's not a low float company, but it's definitely not a high float company. It's a profitable company, and it's an ethical company. If you've ever seen Blood Diamond, or if you know anything about the parasitic organization that is De Beers Diamonds and what they do to diamond prices globally, you understand the need for lab-grown diamonds. If people are going to be interested in diamond jewelry, they're going to want an ethical option. We've seen this with Beyond Meat. We've seen this with Impossible Burger, where people are willing to pay for an ethical, or at least what they view as ethical option on a product. And I think the same thing is going to be happening with the diamond market. And the cool thing about this stock is it's a penny stock. It's a penny stock. Right now, the floor on the chart, it's about $2.50. So you could throw in for a couple hundred shares and probably not even think about it and then just forget about it and see what happens moving into the future. I mean, this is one of those things where I'm not really an activist investor, but activist investing is a trend of the times. And I think as this company grows in popularity, as awareness of the importance and the need for lab-grown diamonds trends upward, I think this is the type of company that can do very well in the future, and I'm happy to have this as part of my portfolio. So I am going to add some shares of this company into my portfolio this week, and I mean, it's not going to be a huge position, but just because I like what they're doing, I think I'm going to do that. All right, everybody, that's it for me this week. I hope you enjoyed the news and earnings video. As always, if you want to support the channel, check out my Webull referral link below the video. If you sign up for an account, deposit $100, you get a free stock, I get a free stock, everybody wins. Also, if you enjoyed the video today, please be sure to like the video, subscribe to the channel, and if you want to be alerted to all my content as soon as it goes live, make sure you hit that notification bell. All right, everybody, thanks a lot. Stay safe. Good luck investing, and I'll see you soon.